And it's that time again to go around the world of business in 55 minutes. Welcome to Business Incorporated. Here's what we have for you on the program today. African Development Bank shares its macroeconomic outlook for 2024. They point out some strategies that could be employed. Also, cocoa prices are at record high, but are the cocoa farmers profiting? We'll have that conversation. And then we move over to Guinea, where carbon tax begins for the mining industry. Good to have you on the program. I'm Ini John McQuarrie. Let's start off from the global space and see what we have from you. We'd really love to start from the global oil prices. And so we have it right there. Inverse relations we see for Brent and WTI today. Down 0.1%, that's for Brent, while WTI is in the green, 0.99%. $82.77 a barrel. Of course, this speaks to the revenue of Nigeria, and then this is for the United States. WTI, $78.07 a barrel. And we can tell you that both contracts climbed over 1% yesterday as a larger than expected drop in the U.S. retail sales prompted hopes that the Federal Reserve will soon start cutting interest rates, which could be positive for oil demand. The U.S. Commerce Department report showed that retail sales dropped 0.8% in January. And that's the biggest fall since February 2023. Economists forecast the retail dipping of about 0.1%. Now, weighing on the market sentiment also is Paris-based International Energy Agency, that's the IEA, the Industrialized World's Energy Watchdog, says that global oil demand growth was losing momentum and trimmed its 2024 growth forecast, in sharp contrast to the view held by Organization of Petroleum Exporting Countries, OPEC. The IEA's monthly report said it expects global oil demand to grow by 1.22 million barrels per day this year, slightly down from last month's estimate. OPEC had on Tuesday stopped with much steeper growth forecast of 2.25 million barrels per day. In the grain space now, Chicago wheat futures dropped on Friday, headed for their biggest weekly fall since last September, after the U.S. government forecast larger than expected inventories as exporters struggle to compete with cheap Russian grain. Looking at the numbers right here, wheat is down 1.1% at $5.60 for 3/4 of a bushel. We see other grains right there, apart from wheat, that was down 1.1%. We see soybeans is on the flip side, 0.3% at $11.65 for 3/4 of a bushel. We also see corn. We have corn also for this, and it's down 0.1%, priced at $4.17 for 1/4 of a bushel. So we know obviously that issue of weather is very prominent in driving the price of the grains. Still in the global space, now we'll go to the metals market, where gold prices gained after softer U.S. data pushed the U.S. dollar and treasury yields lower, while market focus shifted to commentary from Federal Reserve officials for cues on the timeline for interest rate cut. Spot gold was up 0.6%, $2,004.05 per ounce. U.S. gold futures settled 0.5% higher to $2,014.09. Once again, the U.S. retail sale fell, and that, of course, is a driver of that. A separate report from the Labor Department also showed initial claims for state unemployment benefit fell 8,000 to a seasonally adjusted 212,000. The dollar index extended losses, and benchmark of 10-year Treasury yields slipped after the data, making non-yielding bullion more appealing for overseas buyers. The main driver for gold in the short term is interest rate expectations. And there's risk that gold is going to remain under pressure in the short term until the Fed actually says it is time to cut rates. And this, of course, is according to traders and president of the world market at Everbank. The focus now is on producer price index numbers, and that's due later on today in the United States. At least 3 more Fed officials are scheduled to speak later. To other metals now, palladium gained 1.9% to $952.49 an ounce. It surged over 8% on Wednesday on short covering, reclaiming its premium over platinum. Spot platinum climbed 0.9% to $897.36, and silver went up 2.4% to $22.91. And right now, started a couple of hours ago, the Africa Development Group has been meeting to launch its macroeconomic outlook and strategy for 2024. And we have a little bit of that. I think the event is still on, but we're able to get this clip for you from the president of the AfDB. We're still working on that track right there. We promise to get it to you before the program ends. Let's take a short break now. When we come back, that cocoa conversation that we promised, find out if the farmers are benefiting, from the high price of cocoa at this time from Nigeria. Of course, we know the exporters are benefiting, but what about the farmers? We'll drill into that after this break. Just stay with us. It's Business Incorporated. Cocoa prices at record high. We have exporters gaining from that. What about the farmers? We have the president of National Cocoa Association, Mr. Bolarinwa Mufutao, joins us from Akure in Ondo State. Mr. Bolarinwa, good afternoon. Thank you for your time this afternoon.
Thank you for having me.
So it's all over the news now that anyone involved in cocoa is making a lot of money. What's the true situation for your association?
Well, it's of two edgewords. Listen, if people are saying we are making money, how do they define making enough money? Because first of all, yes, the price of cocoa is going up. Naira depreciating value in Nigeria. But the real problem is, what is the volume are we producing? What is the intake? Before this government, there are some restrictions, especially from the former Central Bank of Nigeria, who says you cannot, this is the rate that you must sell your money. But this present government have removed any impediment in the buying and selling of cocoa price. Any of your inflow, you are free to sell it at the willing buyer and willing seller in the bank's rate in Nigeria. Well, I mean, if we are saying the farmers are making money, because once you advance the farmer, the money, let's assume you advance them at the rate of 6 per ton today. By the time that cocoa will be ready from the farmer will be asking you 7-8 millions to deliver. And you have taken some positions already on that basis of giving them the money. So the real beneficiary of this money is the farmer and the license buying agent. The exporters are struggling to survive.
All right, so I know that some time ago, the cocoa farmers, they had a meeting with NEPC, I believe, there in Ondo State. And, I think the NEPC was talking about how to add value for exports. And then the farmers were talking about how to expand. Have you had further meetings? Have there been any action, because obviously that's what is hindering you from maximizing this surge in price?
Yes, the Nigerian Export Promotion Council, they are trying to do a linkage between the farmer, exporters, and the government to ensure that we increase the production of the cocoa. But the major problem is, until we have it right, we are yet to have it right. Why? All the budget they are making year in, year out, the Ministry of Agri and the Nigerian Export Promotion Council.
Having a bit of a network issue there with Mr. Mufutao.
If they cannot increase their production in the farm, even if the price, let the price offshoot, we cannot compare the benefit that cocoa farmers in cocoa exporters or whatever the buyers in Ivory Coast in Ghana are benefiting in a nation where they are to 250 this year. So it's only what you have that you can make benefits there. So we need
looks like we may not be able to continue with this conversation. The network is really terrible, and an interrupted conversation really doesn't sink down. But thank you so much for your efforts, Mr. Bolarinwa Muftau. We hope to have you maybe when you're in Lagos or in an area where the network is stronger. We would be able to have you on. Thank you for that effort, Mr. Muftau. So we hope to get the cocoa farmers, maybe someone to come and tell us how they are benefiting, because I do remember it was last year when the NEPC boss went to Ondo State and met with some cocoa farmers and talked about some of their needs. And top on the list for the cocoa farmers was expansion of their production, which is what Mr. Muftau is saying now, that even though the price is surging at this time globally, well, unfortunately, it's because of some disease attack and all of that in Ivory Coast and Ghana. Nigeria could have benefited at this time, but even Nigeria cannot benefit because production is low. And we know that cocoa is not something you plant one day and get the next day. We need a long-term plan, or at least a medium-term plan, to cover up all of that. So we hope to get the farmers back to express themselves and tell us what can be done, what are the low-hanging fruits that can be adopted for them to maximize this time. Meanwhile, we did promise to bring you the president of AfDB Group, Dr. Akinwumi Adesina, where they launched their macroeconomic outlook for 2024. And he shares some tips, some of observation. You bet that debt and the devaluation of currency on the continent top the list of observations right there.
A lot more effort needs to be put into domestic resource mobilization. The domestic resource mobilization is hinged on the development of the local capital markets. And so we have to do a lot in terms of that, raise financing local capital markets to meet the rising expenditure needs of our countries. That's the first point. The second point is the rising debt service costs of many countries, which has been worsened by the weakening of the domestic currencies, requires a reasonable balance to be achieved between the external and domestic borrowing. I mean, infrastructure, that you need to borrow to do infrastructure. So if you're borrowing to do infrastructure, but if the assets that you have are in local currency and you're borrowing continuously in foreign currency, you're going to have a real problem. I think that's one of the challenges that we have. So developing that local currency financing, it's very key for us to match the revenue streams to the cost of financing that we are having.
All right, now let's head to the markets. Infrastructure financing, a major one for almost all African countries. I mean, even in the most industrialized country, that's South Africa, we know that they're having power, electricity supply issues now because of a lack of investment and reinvestment in the power sector over the years. So it's like every country on the continent has this to deal with. Infrastructure financing is at the basis of underdevelopment on the continent. Now let's head to the markets there. I hope maybe we'll have a little bit of good news. Let's look at the NGX. We see that that is surging, also looking good, more than 1% at intraday. I hope nobody takes this profit before the close of trade. So the NGX is up to 105,299.38 after it gained 1.15% at intraday. South Africa is also good, but not as good as the NGX at this time, 0.60%. And no, they have not regained their 74,000. They're struggling with that, 73,657.44. We go to Egypt, where we know that it's 0.18% up, 28,926.15, while Kenya has Thursday's numbers at 90. They've gone down. I mean, we had 91 earlier this week, but they've gone down to 90.95 at 0.14%. Let's stay in Nigeria now and head to the fixed income space and see how that's doing. We know that yields are growing, but inflation was out yesterday, very hot, 29.9%. Has that started streaming into investor sentiment in the fixed income space? Or now that we see that the NGX is rebounding, do we have more people coming back here, having more confidence right here? Well, let's speak to Caleb Alimi. Caleb Alimi is the chief dealer at Providus Bank to tell us what's been happening. Hi, Caleb. Good afternoon.
Hi, Ini. Good afternoon.
Yeah, so tell us what's going on in the market now. After inflation numbers yesterday, really hot. We are really heading I think we're just like this away from 30%. What's happening? What's the reaction?
I think it's safe to say we're already at 30% because 29.9 is, 30% as it is. So, I mean, you can tell. I mean, reality on the streets is that, it's hotter than 29.9%. I mean, demand on the street. It feels...
Not again. Caleb, can you hear me?
Loud and clear. Can you hear me?
Okay, yes. I lost you for just a bit there. Yeah, go ahead, please.
So I was saying that, the man on the streets feels more than a 30% increase in his pocket as per inflation. The bottle of water I used to buy for a certain price has already changed. The crate of eggs you used to buy at a particular price, is more than 50% up now. So, but on the aggregate, the statisticians are telling us about 30%. So, yes, that is our reality currently.
But we're expecting this. I don't think anyone in Nigeria or anyone talking about Nigerian affairs was expecting it to taper. So I guess investors have already factored this into their decisions before now.
Interestingly, investors have factored it in, but we are already also seeing the regulator now factoring that in. We saw the Treasury bills auction last week. We printed at 19% on the one-year paper. That was a yield of 23%, and that brought us very close to, it reduced the negative real return that we've been experiencing before. Formerly, negative real return used to be double digits, but now it's single digits. Now, so like I said, the regulators are already making those changes. We also expect now there's a bond auction also on Monday, and the regulator is floating about 2.5 trillion. That's a record size. Formerly it takes them like 6 months to a year to raise that kind of money, but they're looking to raise it at one auction. Very, very interesting. So investors are going to come and they're going to demand very high rates, of course.
Yeah, so talking about that bond auction, 2.5 trillion naira, the regulator is becoming so bold coming out there. And, what would have thought that perhaps investors will be on the other side?
Well, what I can say is they understand that there's a need to raise interest rates to try and combat inflation. The MPC will be on the 25th and 26th of this month. We expect at least a 200 basis points increase in the benchmark rates to also just show how serious they are about combating inflation. In the banking space, what we've seen is monetary a tight monetary policy stance, from the regulator, from the CBN, and we expect all of these are just showing that they are trying to bring down inflation. Now, offering this type of size at an auction, means that they really need, they're trying to probably attract, the entire public and also possibly foreign portfolio investors to come in and, invest in these securities. I think that, this is going to print somewhere northwards of 18%.
I heard you say foreign portfolio investors. Are they coming in already? I thought we're proudly Nigerian at this point, both for the equities and the fixed income.
We're probably Nigerian, but, we have a sort of like a supply issue when it comes to foreign currency. And we have these FPIs, foreign portfolio investors, who are yield hunters. They'll come for a yield that is above 20%. And we're beginning to see some interest in the NTB space. We think they'll come into the bond market as well.
Well, the danger with those portfolio foreign investors, and then at any news or of uncertainty, they go out and then the market crashes.
Yeah, but the reforms that the CBN, is implementing in the NAFEM market or in the foreign exchange market, they're becoming more orthodox and more liberal. That should give more confidence to the foreign portfolio investors. What they would only be bothered about now is liquidity. But if they come in their drones, if they come in their drones, they come in large sizes, then the issue of liquidity could be solved. And the more we have more players, playing that FX market, liquidity will be taken care of. And then entry and exit of these foreign portfolio investors will become easy. And then, we should see a positive traction in that foreign exchange spot.
Talking about CBN's, the circulars and all of that, the updates we've been having for a couple of weeks now. At this rate, I hope it doesn't bring uncertainty in the minds of investors, like there's a direction so we know what to expect, in spite of the fact that we're having it come out in bits.
A lot has happened in the last 9 years at the central bank, and this is the new sheriff in town. He's obviously trying to, set different things in place. So the reforms have to come quick and fast, and they also, have to be patient to see that there's traction to what they're doing, so all of that is going to take time. And so they're taking, one step at a time to correct some of the anomalies that we've been used to, or they're just, taking different actions to ensure that, there's a bit of sanity back to the market. It will take time for all of those things to impact the market, but I think they're on the right path.
All right, Caleb, thank you so much for your time. Chief Dealer with Providence Bank.
Thank you for having me.
All right, let's move to other markets now, beginning with the Middle East. There you have it. Abu Dhabi is 0.10% in the green, 9,414.50. Dubai is also green, 0.26%. These are the only two markets that are active today. The others are closed. That's talking about Saudi Arabia and Qatar. So Saudi Arabia closed yesterday in the green, 0.37%, while Qatar was on the flip side, 0.57% at 10,154.52. We head over to the United States, where stock futures were mixed on Friday morning as investors attempt to carry forward the broader market's strong momentum. Futures tied to the Dow Jones we see is in the red, 0.14% at 38,804.00. S&P 500 is in the green, 0.16% at 5,054.75. Several stocks reporting quarterly results posted major moves in after-hours trading. Shares of food delivery service DoorDash dropped 0.5% on a wider than expected loss, while digital advertising company Trade Desk popped about 18.9% after topping analysts' fourth quarter. In further technology, it was down 0.56% at 18,013.50. Now, let's take a few steps back and head to Thursday and see the details of the trading with our correspondent in Washington, Maria Bird.
The U.S. stock market rebounded on Thursday as the Dow Jones was up at 0.9%. The S&P 500 had a record closing day at 0.6% up, and the heavy tech NASDAQ closes 0.3% up. It is clear that many investors are very happy to see this record closing day for the S&P and to see the uptick in the stock market after a very tough beginning of the week. After Tuesday's report from the inflation that showed it was a steady inflation growth and that we might not see inflation decreases as soon as we once thought. This also does show that the U.S. economy is maybe rebounding despite what we're showing as a flattening in retail sales. But the economy is showing some sort of stability as the U.S. market has showed an uptick on Thursday.
An uptick on Thursday there, but we'll see how Friday will close, as we know the different hours right there. Now let's head to Asia and see how that's doing. Hong Kong's market led gains in Asia on Friday with Japan's Nikkei 225. This Nikkei 225 has been making a lot of moves this week. We know that it went back to that 38,000 after it tapered a bit to about 37,000. 38,487.24, gained almost 1% at the close of trade today. Kospi is more than 1%, 1.34% at 2,648.76. Hang Seng Index, even better, 2.48% receipt has gained at the close of Friday's trade, 16,339.96. Looking at other markets right there, Shanghai also green, Australia also green, a very green Friday for Asia right there. The economic slowdown in Japan has raised hopes that it may stick with its ultra-loose monetary policy for longer, even as the country's finance ministers reportedly raised concerns on the yen's weakness. Other Asia-Pacific markets rose on Friday, tracking Wall Street. everything is connected to the dollar and what's going on right there. Well, investors are awaiting Singapore's 2024 budget, which is slated to be released later on today. Now let's come back home to Nigeria, or Africa, I might say, for the continent, and look for investment opportunities, not just in the market, outside the markets. There are some opportunities for investments, and one of that could be the health sector, health technology sector for that matter. As you know, health is the first wealth that you could always have. So looking at the continent, I mean, when we're talking about the AfDB, we talked about infrastructure financing, which has also affected health, welfare and welfare of employers and productivity. So now let's see if the private sector could contribute to this. And joining us for this conversation is Zila Waminaje, is a consultant with Salient Advisory, joins us virtually from Abuja. Hi Zila, good afternoon.
Hello, good afternoon. Happy to be here.
Yeah, good to have you here. So tell us what opportunities we have in the African health tech sector, not just the health sector, but the technology sector.
Yes. So last year in 2023, we tracked, we're able to track about 114 African health tech innovators who are operating on the continent, and collectively, this group of innovators raised $169 million in funding across 145 deals. And when you compare this data with that from 2022, it's just a 2% funding decline. And overall, the African health tech innovators actually proved resilient in the past year compared to other sectors in the tech ecosystem. Bigger reports posit that the broader tech ecosystem had about 39% funding decline. So we see that investors are heavily betting on these African health tech innovators. Solutions that stand out are the online pharmacy operators and also the electronic medical records innovators.
Yeah, very interesting, because I wanted to ask you, is it just about the apps? So when you say online innovators, tell us about how do these things work? I do know that there's a new system now where doctors especially can connect with doctors who are more exposed or experienced than they are, and that's using technology, and they can treat people right. So tell us more about the details of these available opportunities.
Yes, that's actually an exciting one. A popular solution in the health tech space is the telemedicine solutions, which allow patients to be able to talk to doctors. But we're also seeing these innovators, develop solutions that enable healthcare providers to collaborate better with some senior consultants in their space. And where we're seeing this happening a lot is actually in the diagnostic sectors. So thinking of your solutions like your X-ray, CT scans and the rest. We are aware of the brain drain that is happening on the African continent. We don't really have a lot of highly qualified radiologists on the continent. So we have some innovators who are developing these solutions whereby our lab technicians that are currently here on the continent can relate with senior colleagues who are maybe outside the continent, or even if bringing it back to the local communities now. Imagine a primary healthcare center in the local community, and then we have at the national level a tertiary hospital. So there are solutions available for these radiologists to collaborate together. You do your X-ray and then you transmit the results to a senior colleague to review, and then they send the results back. So it's really pretty amazing.
Yeah, well, what about the online pharmacies? How does that work? We know that the online pharmacies attracted about 38% of all funding last year. But how does it work?
COVID was an eye-opener for everyone, and seeing the effect that it had on logistics systems. So these innovators basically just leverage on the normal pharmacy model that we have. Instead of walking out to your local pharmacy to purchase a medicine, you can just basically go on your phone, download an app, order your medications, and then it gets delivered to you. There are even some companies who are offering services where we know patients need medications on a recurring or maybe every month. And so you can subscribe to their platforms, and then every month they send your medications to your homes. And so it's really amazing. And also these online pharmacies, aside from serving the consumers, they also help. We have some who we refer to as the online pharmacy aggregators. So they provide the technology infrastructure for local pharmacies now who are the physical brick and mortar pharmacies to basically digitize their operations. And so they partner with a multitude of pharmacies and then just distribute these products across the continent or your country, as the case may be.
Yeah, but my fear is for a continent that is dealing with insufficient infrastructural funding, and we know by the time you go you go online and all of that, you need strong infrastructure. How do we, grow on this with this challenge?
So one thing that has been interesting in the online pharmacy space is to see the government actually stepping up to prepare regulations, to guide the operations of online pharmacy operators. Using Ghana, for example, they've kind of built this national infrastructure where all online pharmacy operators need to sign up on the platform. They are registered, make sure they are licensed. And that's also just to prevent like a stopgap in terms of product quality assurance, to make sure that these online pharmacy operators are regulated and patients are having access to high quality services. So we've seen even in Nigeria in 2021, the online pharmacy regulations was released. And in fact, as early last year, there was a review of the regulations, and we are hoping that by the time all stakeholders come together and are able to come to an agreement on that, that will be enacted.
So, you mentioned Ghana, you mentioned Nigeria, and these, as well as Kenya, Egypt, they seem to be where the funds are concentrated. Is it because of the population? What's the attraction, and how do we sustain that funding?
Yes, Nigeria, Kenya, and Egypt, they accounted for 87% of the total funding. So they stand out as key hubs for these Healtech innovators. So maybe the population plays a role in that. But then we're seeing this concentration of Healtech innovations actually being headquartered in these countries. Nigeria was a top player, accounting for 35% of the total funding, followed by Kenya and Egypt. And also the top innovators that got the most funding this year actually headquartered in these countries. Take, for example, Helium Melt in Nigeria. They raised $30 million and they are headquartered in Nigeria. And then in Kenya, we have Kasha, an online pharmacy, and also Maidawa that raised 21 million and 20 million. And also in Egypt, we see companies like Yodawi, Shefa, and Maisha Med raising large, vast amounts of money. And so they are headquartered here. So these top innovators being headquartered here kind of like just makes the funding to be concentrated in these regions.
So this is coming from the private sector. You talked about regulation. Ghana has started. I think you also mentioned Nigeria. How can the government bring, regulation to because investors will also need assurance, of your investment. They're investors, they want to make profit. So what kind of regulation do you see to bring about, organization, certainty, and sustenance of this flow?
We're already seeing a lot of traction. On African governments, they've released the ICT policy framework, the guiding digital health operations. But even just stepping back away from the Healtech, I think the general IT policies that they have and even their data protection laws, Healtech innovators definitely have to abide by that. And then if we now narrow it, coming back again now to the digital health operations, looking at the activities, of investors in this space, actually betting on these innovators, that's a signal to show that these innovators are primed for skills. And so there's opportunity for government to collaborate with also investors. Just look at which companies are being funded, what are their operations like, what are the challenges, And so there's need for that forum to bring these different stakeholders into the room and just ideate and look for, explore opportunities for synergy.
So these opportunities, is it just anyone that can tap into it? Because it sounds like it's a huge investment opportunity that requires a large overhead or initial investment.
Well, it depends on your solution. The African continent is not, empty of its challenges, especially when we look at the healthcare space. We've seen these amazing innovators ideate and even innovate despite the challenges. So one of the things we're seeing last year, we saw that about 77% of the funding was actually directed to early stage investments, so at the pre-seed and seed stage. So it goes to show that investors are willing to support these kind of nascent and early stage companies. So it's for you to kind of look at around your environment, identify what the top healthcare challenges are, come up with your solution. There are lots of incubator programs that are targeted towards African tech innovators. If to highlight one, there's the Investing in Innovation program, which every year they announce a cohort of 30 Healtech companies that they provide with grants of $50,000. So that is a good avenue to access funding to basically kickstart your idea.
All right. Thank you so much, Zila Waminaje, consultant with Salient Advisory. Thank you for sharing those opportunities, with everyone who would love to take advantage of it.
Thank you. I'm happy to hear.
Let's move on to Berlin now and see what's going on there. The European Commission cut both its growth and inflation forecast for the Eurozone this year, but it warns that geopolitical tensions could spell uncertainty. Let's get more on this with DW correspondent Chiponda Chimbelu. Hi, Chip. Good afternoon. Happy Friday.
Thanks for having me. Well, the European Commission expects the Eurozone economy to expand 0.8%. Now, that is 4 basis points lower than was forecast in November. The good news is that the EU Commission expects inflation to be lower this year than was previously predicted. It is expected to drop to 2.7%. Although the European Central Bank has held interest rates so far, it is widely expected to start cutting rates later this year amid slowing inflation. Lower energy commodity prices and sluggish growth are helping inflation slow faster than was anticipated. But the European Commission still warns of the risk of geopolitical tensions. There are fears that the conflict in the Middle East could broaden beyond Israel and Gaza. Disruptions in the Red Sea could also dampen the European economy.
So what about the pain points in this Eurozone economy? Have they been able to point that out, and perhaps they can now talk of a solution on how to move out of it?
No Eurozone economy is expected to contract this year. In 2023, 8 of the 20 euro area economies suffered contractions, but pain points do remain, in particular for the region's 3 biggest economies, Germany, France, and Italy. The European Commission has slashed Germany's economic growth forecast to just 0.3% this year. Now, that's less than half of its previous prediction of 0.8%. German industry has been struggling amid the energy crisis, a consequence of the fallout from Russia's invasion of Ukraine 2 years ago. The country has not been able to come up with alternatives to cheap Russian natural gas. Foreign direct investment is also down in Germany. Investors are looking elsewhere. Things aren't better in neighboring France either. But Europe's second biggest economy is expected to do slightly better than Germany. It is expected to expand 0.9% this year. Italy will only grow 0.6%. Now, the sluggish growth in the Eurozone's biggest economies will drag down the whole region. French Finance Minister Bruno Le Maire has said that Europe has a structural problem with growth. Getting the region's economy to grow at a quicker pace will be very much a question of how European countries go about finding solutions to structural challenges.
What about the market, Chip? How's that looking today?
Well, European stocks are expected to trade higher today. U.S. retail and manufacturing data has renewed hopes the Fed may lower interest rates earlier. And here in Europe, traders will be watching a speech by European Central Bank President Christine Lagarde. The ECB's chief economist, Philip Lane, is also going to be speaking. In terms of data, here in Germany, the Federal Statistical Office Daystatus will release data on German wholesale prices for January. The figures are expected to signal the easing inflationary pressure in the Eurozone. Now, in December, wholesale prices fell for the 9th month in a row.
Chip, thank you so much for the week's analysis. Talk to you again next time. Let's come to Africa now. Guinea is planning to introduce a carbon tax on mining companies as it starts talks with United Arab Emirates investors to raise $4.3 billion to fund development projects. The government is studying the modalities of implementing such a tax to defray the cost of emissions and removal of vegetative cover by mining firms. Prime Minister Bernard Gomo said this during an investors forum organized by the West African nation. Electricity producer Kengen has also contributed to this. And so we move to Kenya, where we can tell you that electricity, well, some shareholders there have had some good news there because shareholders have received some money from the company in Kenya. That's Kenya Electricity Company. And it's under the collaboration of the Sovereign Wealth Fund that will invest about 250 million in establishing cutting-edge right there in that country. Kengen will pay a total dividend of 1.98 billion shillings, which means the National Treasury will get a payout of 1.43 billion shillings. The firm is yet to announce when it will pay, and Kengen Managing Director Peter Njenga reiterated the company's 2024 priorities, emphasizing a focus on new technologies to enhance electricity generation using existing plants. Now let's head to the crypto space. Now let's have the top stories at this time. Some interesting news coming right there. First of all, I can tell you Ethiopia is to start mining Bitcoin through new data. The Ethiopian government, there you have it. Interesting, Ethiopia to start mining Bitcoin. And the Ethiopian government is said they will begin mining Bitcoin through a new partnership with Data Center Service, which is a subsidiary of West Data Group. According to Ethiopia-based mining company, the CEO, Kal Kasa. The partnership was announced by the country's sovereign wealth fund, Ethiopian Investment Holdings. And then they're saying that under the collaboration, the sovereign wealth fund will invest $250 million in establishing cutting-edge infrastructure for data mining and artificial intelligence training operations in the country. Casa says that the deal includes setting up Bitcoin mining operations using Canaan Avalon miners, and it's part of the country's broader strategy to leverage its technological and energy resources to attract international investment and foster economic growth. However, the government is yet to confirm this and did not respond to some of the requests. So we'll be watching that space to see where this leads. And still, of course, talking about the headlines there, nearly 60% of coins listed on CoinMarketCap died in 2023. This is a new research conducted by AlphaQuest and shows that among 12,343 crypto projects investigated, over 8,850 have become default in the past year. Could that mean a loss of investment? Well, it's a question that a lot of investors are asking about that. But let's go back to the numbers now and see the price of Bitcoin. Yesterday we were celebrating 51,000. Today we're not celebrating 51,000. Today we have 51,915.67 after it dropped 0.63%. Could that be a quick profit taken by some investors? Ethereum is, however, still in the green, 0.81%, 2,814.60. BNB, XRP, Cardano are still in the green. Solana has dropped also. Let's see the full. There you have. Well, it's still a greedy market. That's part of the reason why we've lost some of that. Some investors have decided to make the most of this greed at this time. But as we always say, you need to customize your decisions. You don't take a decision because another investor is taking those decisions, because when did you get into the market? What was the number there? And these are the things that you have to check. So there you have Bitcoin down 0.63%, Ethereum in the positive, as well as the others, Cardano and XRP in the positive. Now let's have Solomon Amunde join us. Perhaps he can tell us where almost 1% went on Bitcoin from one day to the next. Hi, Solomon. Good afternoon.
Good afternoon, Ini.
Yeah, so this was a quick profit taking on Bitcoin. I guess is expected.
Yeah, it's very, very expected. We have a huge sell-off volume at around $52,000 and $53,000. So that's just what we're seeing play out, basically.
So is it just profit taking? There's no news that's driving it, and we don't expect anything.
So obviously, we have lots of bullish news in the market. We have most of the banking associations trying to press on the SEC to be able to let banks to be able to be custodians when it comes to holding these assets too. We have that as a bullish news in the market. But that aside, we've had a very, very long rally on the price of Bitcoin, and OG traders are being quite sentimental that we must have approached the top of this particular mini bull market. So we're not expecting much upside, basically. Rather, we're expecting consolidation and gradual correction for Bitcoin.
So what's happening to Bitcoin ETF?
Yeah, the ETFs have been gaining traction and lots of volume. Like they've been easily hitting over $1 billion volume daily. And we have, like I said earlier, lots of banks that want a piece of this pie. So we have lots of positive sentiments around the Bitcoin ETF. And we're looking at them, and we're also expecting basically more companies to file for Bitcoin ETF and to also gain approval. And also banks, which is very, very bullish. Once the banks, they get the approval to be custodians to these assets, that would bring in more liquidity to the market and lots of hype too.
And then we see that also the Chinese New Year also had a hand to play in the movement of Bitcoin price.
Yeah, the Chinese New Year helped to foster the first initial move we had from around $40,000, $41,000, and it gave us that desired boost to about $48K before the whole ETF narrative kicked in again, and we started seeing huge volume. And I would say the recession, the news of recession in UK has also helped push some liquidity to Bitcoin too. So we have some persons looking for assets that can be able to give them good return on investments. So they are also trying to buy some of these Bitcoins, and they're also exploring the ideas of the ETF. So I also believe that's why we're seeing more transaction volume on the ETF.
What about here in Nigeria? What's happening? I did see a report where, some people were giving some advice about, how to get your investments out. With CBN being so busy, I've not really seen a circular on cryptocurrency, but what's the space looking like at this time?
Drawing a bit from what's happening in the US, where the banks, they are pressing the SEC to come up with a new definition of crypto, which would allow them to be custodians. I feel in Nigeria we need something similar. We need a holistic overview of the crypto assets, and we need to come up with a separate framework that we can use to monitor this asset and treat this asset. That way, the government can be able to benefit more in terms of tasking this asset and have a piece of what is happening in the ecosystem. Because right now, the government is actually missing out on a whole lot, and they can only find a way in when we come up with better definition and a better framework to regulate these assets that would favor both the investors and also the players in the ecosystem.
Stories like Ethiopia, having new partners on Bitcoin mining, that should also be a motivation, for Nigeria to look, perhaps we're missing out on some of this revenue we're looking for.
Yeah, we're missing out on a whole lot. We're missing out on hundreds of millions of dollars running into billions of dollars. So there's a whole lot, like I said, that the governments can make in the whole crypto ecosystem. There's a whole lot. They need to redefine it, and they need to open it up for investors and also we, the stakeholders in the ecosystem. There's a whole lot we can do, but we have limited capacity, and the laws are not favorable right now. So that's why everyone is being very skeptical.
I don't know if the CBN can create time for crypto space at this time, because the CBN is very busy trying to deal with the value of the naira. We see it in spite of all of the intervention and updates on the policies. We still see the naira dropping. So I don't know if this would be a good time for the CBN to look at cryptocurrency.
Yeah, I believe it's the best time for them to look at it, because while the naira is crashing, most persons are falling back to cryptocurrencies too. And most persons are using cryptocurrencies as a hedge for the falling naira. So I feel it's extremely important right now for the CBN to look into cryptocurrency and blockchain, because like it or not, people are turning away and looking for ways so that they can be able to hedge their assets. And most persons are turning towards cryptocurrencies. So I believe the CBN should take this very, very seriously.
All right. Well, we hope they hear and they think about it. If it's a priority, they'll follow up. But what do you see happening to the coins, Bitcoin and the others over this weekend?
Yeah, so Bitcoin has had an amazing rally, and right now it's comfortably sitting at around $51,500. We have a support at $53K. So what I'm expecting basically is we should consolidate at the current price, and afterwards we should see a slow correction. But I'm not expecting that to happen this weekend. Neither am I expecting it to happen aggressively this month. I'm expecting that from like first week of next month.
So what would you say should be investors' stance at this time? Watch or make a move?
Any investor buying right now is late, in my own opinion. Any investor buying now is late. We're already at the climax. So investors should have some patience and wait to see some retracement in the Bitcoin price, at least to the range of 40K and below. Then investors can begin to DCA into these assets. Because even those that got in based on ETF, they got in at better prices. And the first buyers of these ETFs are already in profit.
You think Bitcoin will go to 40 again in any recent times?
Yeah, I'm 100% positive that Bitcoin will still go back to $40,000 and even below. Yeah, 100% positive on that.
Wow. All right, we'll watch and see. Solomon Amunde, thank you so much for your thoughts this afternoon.
Thank you very much, Ini.
All right, now, so it's time to go for the weekend. Haven't you been looking forward to it? You need to get some rest, and then we'll start again on Monday. So that's it for Business Incorporated. I'll see you on Monday, God's grace. We'll have a restful weekend. Bye-bye.